In this episode of the Dispensary Marketing Podcast, I'm pleased to bring you Mitchell Osak. He's the CEO and Managing Director of Quanta Consulting, Inc. He's managed over 220 cannabis companies, brands, retailers, and LPs. And in this episode, we talk about 1, how to get customers to pay a premium for your products, 2, the biggest misconceptions for new cannabis founders entering into the industry, and 3, the ironic way you should go about preparing your business in order to get the biggest exit possible. You're not going to want to miss it. I'll see you over there. Mitchell, welcome to the Dispensary Marketing Podcast. Thanks for coming on the show.
Pleasure to be with you, Brandon.
Awesome. So, how do you define a brand and why is it so important?
People define brands differently. I do it the most simply, but also in my impression, the most powerful way. And I defined a brand as a promise of value from a company to a consumer. And why is it important? Because at the heart of any company, particularly cannabis companies, we're selling functional benefits, image benefits, aspirational benefits. Fundamentally, there's nothing more important than that relationship, that transactional relationship between the producer and the consumer, but more importantly, how that transcends many facets of the cannabis community and psychoactive products and so on and so forth. So, ultimately, without a strong brand, it's hard to see how any cannabis retailer or producer can survive going forward and even make a lot of profit.
You said it very wonderfully put at the beginning. It's a promise that's made to an end consumer, and ideally that the brand delivers on that promise. Now, is it as simple as me just saying, hey, we do X and then delivering on that promise? Is it more of like an emotional feel where I'm putting out some sort of branding, and we'll kind of get into what that looks like in a second. But how does one execute on delivering that promise, but then also deliver the message of the thing that they are promising to do?
Very simple question. A lot of steps to unpack it. But when I described that promise, I said it was a powerful yet simple way. And it's powerful because there's a lot tied up in those simple words. For example, that brand has to be relevant to a consumer. And what does relevant mean? That brand has to address the functional, emotional, and aspirational needs of that consumer. So every consumer will smoke cannabis or buy a car or go shopping for clothes, and there are basic functional aspects of that. They need to be clothed and so on and so forth. They want to keep warm in the winter, but not every pair of pants or shirt is the same. Some brands, even though they might be made in the same shop, in Asia, carry a higher image or more aspirational, and those brands will deliver on other benefits, image and emotional benefits, above and beyond just clothing somebody. So in any business to consumer or even business to business market, there are different attributes that consumers look for, and that's based on their particular needs. So obviously a brand has to be relevant. Number 2 is it has to be consistent, to your excellent point. One of the reasons why McDonald's is such a powerful brand, or Coke, or, insert any, great consumer brand, is that it's consistently delivered time in, time again. So a Big Mac is the same in Toronto as it is in Miami, as it is in Mexico City and France. And that consistency is a hallmark of a brand. Consumers know what they're getting. But operationally, that's a very difficult thing to deliver on because your meat is not the same in every particular country and so on and so forth, and your chefs aren't the same and so on and so forth. So consistency is an important part of it. And the third big aspect for me, which is really resonant in cannabis, is a sense of authenticity. Or does the brand have a right to compete in this space? And it could be authenticity because it has its roots in the OG market. It could be legitimacy. Whatever fancy English word you use, you need a right to play, a right to compete. And in cannabis, that right is very important for many consumers, and an area where, frankly, a lot of cannabis companies have dropped the ball.
I think the difficult part isn't necessarily the things that you said. Like you said, it is quote unquote easy, right? Being relevant, being consistent, and being authentic. But then the question is how do you be relevant, consistent, and authentic to a specific demographic that you're trying to target? And you mentioned earlier in one of our conversations, you had a talk on a panel where you said you would allocate X resources to do X. Why don't you, walk us through that story and, the reasons why you decided to spend so much money on the initial processes of figuring out what your market is, so then you can deliver your promise of being authentic, consistent, and relevant to them.
Will do, but I'll try to be a lot pithier
Sure.
now than I was before. So I was on a panel in Q4 2018, and it was a marketing panel. And basically, the moderator asked four of us a question. There were three cannabis marketing agency people on that panel, plus me. I'm a management consultant. And the question was, how would you spend $2 million, your $2 million marketing budget, very early on in legalization? And anybody who was around in 2018 knew that, even though cannabis was legalized, there were still a lot of restrictions. We didn't have full retail penetration and so on and so forth. So it was really, really early days. And the first three marketing agency people, talked about, having, strong digital programs, have significant community outreach, some modest aspects of sponsorship, where that was still a gray area at that time. And I was scratching my head and I was thinking to myself, like, who is the customer, and which segments are the customer going to sort of fall into, and what are their needs? And I'm an ex-P&G guy, so everything we ever did at Procter & Gamble was start with consumer needs and a segment and build back from that. And when it got to me, I basically said, look, I take that $2 million and I'd allocate a few $100,000 to segmenting the market and learning about consumer needs by segment, and then figuring out where we're going to compete and where we thought the profit was going to be, and then tailor our marketing and our value proposition to that particular segment. I thought that was essentially common sense. It was something that I cited as, page 5 in the P&G marketing playbook. And I was literally laughed out of the panel. Not by everybody, though. A whole bunch of people came up to me afterwards quietly and said, I completely agree with you. It's always better to measure twice, cut once, instead of throwing money at a segment that you think is going to buy your product. Long story short, I think that's been a fundamental gap in cannabis. It obviously was in Q4 2018, but it remains to today. When you talk to many producers, they talk about the premium segment or the value segment and so on, which doesn't really tell you anything about who the consumer is, what their needs are. Is that segment really going to be profitable for you? For example, if you're going after the flower market with $99 or $89 ounces, can you actually make money there? And unless you're the lowest cost producer or one of the lowest cost producers, at best you'll be exchanging 2 nickels for a dime. That's a failing strategy if you're not the lowest cost producer. By the same token, if you're going after the premium craft level bespoke kind of customer, they are great too, but they're also very discerning. They're very fickle. And unless you have terrific genetics and you have great branding and so on and so forth, they won't spend, let's say, $400, $500 an ounce for your product either. So what you really need to do is choose the right segments, have the right value proposition for them, market and message them properly. That's your brand activation, and have a business model and capabilities that can repeatedly and consistently deliver on that value proposition. And that's a hard thing to do in cannabis.
You said something to me again on our previous call that like a light bulb boom went off in my head. You said, if water bottle companies can, have different segments of the market, and you're selling water, you have your Evians, you have your Aquafinas, you have your Nestle's, and you have your, Saratoga Springs water, glass bottles, plastic bottles, different sizes, then cannabis as a lifestyle brand can absolutely segment themselves based on brand. And something that you mentioned in, answering the previous question was heavily on consumer needs. And I think currently a lot of founders and a lot of owners, they see the way they view consumer needs is kind of like you said, age, demographic, and maybe if they're premium or discount shoppers, right? Like that's pretty much where they go. Now, would you be able to walk me through, I'm a new dispensary owner or I'm a new brand owner and I'm looking to look into what are some things that I should look out for from a brand perspective that is a little bit deeper than just looking at what age or what, sex my, customers might be?
Well, the fact that if you start off and you're a dispensary owner or a small producer and you start thinking about segments, you're already on second base. because most companies and most marketers, and I'm not trying to be insulting when I say this, their philosophy very often is grow it and people will come. Let's grow the best fire, or let's price it at a certain point and everyone's going to want to come, particularly if you're a dispensary owner. That just doesn't work anymore because there's too many dispensaries, there's too many Me Too products. You really need to start going below the surface and looking for different image-based or let's say functional-based need states. Those are fancy terms for some consumers want the absolute lowest price, so they want the lowest cost per buzz. Others love terpenes, so they're looking for terpene-rich flower. Others are more seasonally focused, so they like the gassy kind of flower in the fall, and they want more of the fruity stuff in the spring, and that's what drives their purchase decisions. It really is dependent on who your target consumer is, and then how do you cluster them, or how do you find them in a segment such that you can only sell to that particular segment. With dispensary owners, it's very difficult because, if you're in downtown Toronto or suburban Chicago, you're going to have a variety of different people. How do you target them when you don't really know? The solution is really to go very narrow and very deep. And for a dispensary owner, it could be if you're going after the value segment, the people who just want the most THC and the most product for the lowest price, you're going to want a low-cost operating model. So small footprint, very few SKUs. It would be almost like Walmart, but much smaller. You just want to push out as much product as you can and minimize all the frills and all the costs and all the headcount, because at the end of the day, that's what your consumer wants. They don't need to consult bud tenders. They just want to get in and get out for the lowest cost. On the other hand, if you're going after the high-end consumer that looks for more of an experience, that looks for new product and so on and so forth, then you're going to create a store that's very different. Now, the low-cost Walmart type of weed dispensary can sit right beside the bespoke Apple store kind of weed store because they're going after different customers in a very particular catchment area. But the key is that each of those dispensary owners will zero in on who their target market is, really understand them well, engage them all the time, and give them more of what they want all the time. And that's about research, absolutely. It's about reading your point of sale data and so on and so forth. It's about understanding your own operating model. If you have a very expensive lease, it's going to be hard to be the Walmart of weed. You could appreciate that. If you don't invest in store design and bud tender education, for example, it's going to be hard to provide the bespoke experience that you really need. So it's a lot of moving parts. It's almost like a gear. They all have to come together properly through compliance. But once they do that, it's a really, really powerful way of competing through brand, but also customer experience, which is part of brand, but that includes the operating model, the business model, the store aesthetics, the training, all of these broader things that promote your brand, but support it from behind.
So when I'm looking at brand, am I looking only at my sales data to determine if products resonate for specific consumers? Am I doing customer surveys to make sure, my feet are on the street? Am I asking bud tenders to give a little bit more feedback? Is it all of the above? Like, what is the thing that would help me determine what best resonates with what people?
It's all the above, and I'll just add a couple of other areas. It's following industry trends, for example. It's pretty apparent to me that if pre-rolls are growing in every market across Canada, across the United States, which they are, then there's a good chance that pre-rolls will be growing in your particular catchment area. So you want to look at broader trends. You want to zoom out from your community, zoom out from the city, look at it from a provincial or state level, because the regulations drive trends and drive availability. We know that, for example, in places like Quebec and Nova Scotia and Ontario. But even zoom out even broader than that and say, well, where is the national or the international cannabis? What are those cannabis trends and so on? And that could include things like edibles, concentrates, and so on that are actually growing in popularity and so on and so forth. So industry trends and developments, obviously big. What I'm about to say might be too in-depth for a lot of retailers, but I would still encourage them to think about it. And I would explore things like anthropology.
Okay.
And what do I mean by that is, how does cannabis fit within the broader social and cultural milieu? In certain communities, cannabis is seen more as medicine than they are in other communities. For example, where I grew up in suburban Toronto, cannabis was 100% recreational. It was really something to get us high, and it was an alternative to alcohol. In other communities of Toronto where I grew up, let's say the Jamaican community, cannabis was perceived very differently. By looking at cannabis in your market through an anthropological lens, you'll see different senses of how people perceive it and how your brand could be tailored to the functional needs, to the lexicon of that community, and to how they perceive different brands and different companies and what they want from that customer experience. So that anthropological, social, cultural lens is also extremely important in many major metropolitan areas in North America.
Running a dispensary is harder than ever. There are competitors popping up all over the place. So to help you with this, I've talked to 100 dispensary owners from coast to coast, and I developed this 6-stage marketing plan to help you increase your online orders, increase revenue, and also help you have a lineup of people outside your door. So if this is something you want, please check out the links now. Now, one of the core tenets of building a brand was consistency, right? But then you also mentioned things like following trends. How do I balance, let's say, something that might have worked last year from a trendy perspective to something that might work better this year? And how do I maybe determine if my brand is working as effectively as it could be? Am I maxing out the potential of the brand that I'm promising to my customers? Or is there an opportunity to maybe switch a couple things and pivot for potential growth in the future, right? To me, there's a bunch of uncertainty with regards to brand, because to your point, brand isn't something, I'm not, flicking my fingers and then all of a sudden people perceive it as something differently, right? It is a gradual change over time, right? So how do you typically deal when founders have questions about pivoting, changing brands, changing how they feel about their business, who they want to target, thinking there's different potential in the future? Like, what does that look like, and how do you typically consult when those problems arise?
Right. So when you're building a brand and it's based on consumer needs, and let's say you're a producer on the needs of your retailer, because there is such a thing called a retailer value proposition as well, which you're branding to them as well. You basically are trying to create, complete alignment and congruence between your value proposition and the needs of the consumer and the needs of the retailer. And let's say you nail that at the beginning, and that sounds great. However, things change. Those things could be competition coming out with copycat products. It could be price compression. It could be you don't get that alignment, that product market fit perfectly at that particular time, and you need to tweak it. Now, the what's required always with branding is a feedback loop. So once you launch your brands, and your brand could be the store, it could be products, it could be a product line. So, I'm using brand in a very general way. You should always be talking to your consumers as well as buyers and influencers about how your brand is resonating in the marketplace. Looking at your POS is one thing, but very often it's not the only thing you need to do. You need to actually talk to people. And one of the major failings of a lot of brand managers in cannabis is they launch it and leave it, and then they come back and they think, okay, well, that's not really working. Why don't we change it? Without understanding why it's not working. It may not be working for a whole host of reasons, part of which could be competition, part of which could be seasonality. We don't always know. So the key thing with your brands is to always canvas your consumers and buyers and read, like in places like Reddit, what influencers are saying, and then decide, okay, is this brand working? Great. Then we'll want to reinvest behind more of it. We'll want to offer more SKUs, more shelf space, because clearly it's working. But where it's not working, ask the question why. And it could be because it's priced too low, it could be priced too high. There are many different variables associated with that. But you don't always want to throw out the baby with the bathwater, so to speak. So it's a constant iterative process of launch, test, measure, tweak, maybe not tweak, relaunch, and so on and so forth, just to make sure that you're getting a lot closer to that bullseye with your target. Too many people in cannabis pull the plug on brands way too early when they had product market fit, or get consumed with hubris and excitement and don't constantly say, okay, how is this looking 6 months from now? They fall in love with the brand, and then when the brand collapses, they go, well, what happened? So always you want that feedback loop to measure and to talk to people and just make sure you're tacking, as they would say in sailing, towards that target product market fit.
Interesting. So do you have any brands off the top of your head, be it cannabis or not, maybe specifically for this audience, if you do have any cannabis examples of companies that are doing it right, in your opinion?
Let me use the analogy I use with my clients. A passing grade is a C, a great brand is an A, and a failure is everything below a C. Okay? There are some C's and B's in our industry right now in Canada and in the United States, but I wouldn't say they resemble anything near a world-class brand like a Coke or an Amazon or a Nike. And I'm not criticizing them for that because it's still early and so on and so forth. But when we look at the drivers of strong brands, coming back to what you said, consistency, authenticity, product market fit, none of them are delivering that repeatedly. And how can I make that claim? Because I know a lot of people are going to text you saying, this idiot doesn't know what he's talking about, is where I look at different measures of brand strength. And I'll just talk about 3 for a second. So one measure could be unaided awareness. Ask a consumer to name a pre-roll, a leading pre-roll, and not something they had just bought when they left the store. You'll find at best, most consumers, maybe 25% of consumers will be able to name a strong brand, and most of them won't. If I asked you to name, the best cola out there, you'd have Pepsi, Coke, but you rarely see that. So unaided awareness of cannabis products, very low. Okay? 25%, 30%. That's low.
Sorry to interrupt. When you say unaided awareness, does this mean from both cannabis consuming people and non-consuming people? Is this just overall general? Okay.
You would break them up.
Okay.
So, and then when you break it up, you would break up heavy users, moderate users, light users. You're going to find unaided awareness very low. Okay, that's just a fact. And it's not necessarily because the branders are doing a bad job. You can't advertise these products. You can't, put them in front of a consumer like you could put beer and alcohol. It's really hard to build that. Number 2, when you have a strong brand, strong brands create, deliver higher margins, selling margins, both for the retailer and the producer, than low brand image brands. So imagine Porsche or Armani or Lamborghini or, all those brands. Their margins are way higher than Ford and Toyota and Hyundai for a reason. They're strong brands, okay? So you have very little brand power from a margin perspective in cannabis right now. Again, there's a lot of reasons for that. Some the fault of the brand managers, some the fault of the regulations. But, even if you have unaided awareness, that doesn't translate into higher margins for the most part for the resellers and the producers. That's number 2. And number 3, I'll say, is the ability of a brand-centric company right now to deliver higher valuations than their peers. There are and this is where I'm going to name some companies. There are companies like Pure Sun Farms, Decibel, Canara, Rubicon Organics that have a strong roster of brands. And I'm talking about Canadians. There are Americans as well. But since you're from Toronto, we'll keep this Canadian focused. Do their corporate valuations reflect that stronger brand power? Not really. They might have a small brand premium, but shareholders in the market are not rewarding them from that. Compare and contrast that to Nike versus Adidas or Louis Vuitton versus Kate Spade. You don't get that brand valuation lift that you see in every other industry, that you see in cannabis. And, your bottled water example was a great one. You have Evian, which has a much stronger valuation, versus Aquafina, which doesn't. It's essentially the same product. They come from different places, but you don't have that difference in cannabis yet. You may see it, but not right now.
So you've advised over 220 cannabis companies. I was on your website. I don't know if it's exceeding 300 or anything like that
No,
now,
it's around there.
give or take. What's some of the biggest misconceptions that you find founders, company owners, stakeholders, investors have when entering the cannabis industry?
Well, it's a great question. I wouldn't use the term misconception. I'll use the term what flawed assumptions do they come into the industry? There are many. First one I talked about, if you build it and you grow it, people will come. No, they won't. They might initially, but then they won't keep coming because there's so much other competition and the challenges of getting the product on the shelf. So, you've got to constantly, be getting on base. Because if you start striking out a couple of times and you're a producer, you're going to be dropped by the government wholesaler or dropped by the reseller. So you have to constantly produce. It's number one. Number two is people who always say it's all about quality, quality, quality. That's another major misconception or faulty assumption. If you define quality in terms of high THC and high terpenes, no, that's not true. Based on the fact that a big chunk of the market wants $79 ounces. They don't care about terpenes. They don't care about quality. They want to get high for the lowest possible price and the maximum THC. So those people aren't in the market for a Porsche. They're in the market for a Hyundai. And by the way, those consumers are just as valuable and important as the Porsche consumers. They just have different needs, right? So it's not about more. It's about the right product for the right consumer. And many people here, particularly from the OG community, come in thinking, we grow the best stuff. And, my answer to them is, so what? You want to have the highest volume at the highest margin and delight the most customers. That's number two. And number three is an important one, particularly for retailers, and that is, weed is easy to sell. As long as we have educated bud tenders, we have a great selection, it's no problem. Well, that's not true either because, cannabis retail is like any other retail. There's a lot of regulations, without a doubt. There's a lot of restrictions, but at the end of the day, you have to know how to run a store or a chain of stores. And too many dispensary owners I talk to and managers, they seem to have missed out on that lesson, or they forget the fact that this stuff just doesn't sell. And there's dozens of competitive stores, particularly in places like downtown Toronto, within walking distance from where you are. So you have to know how to run a great operation and how to be a great merchant. And that lesson sometimes is ignored or not paid too much attention to when you're opening your first dispensary or grow.
I think that segues perfectly into the next question that I was very curious about. A thing that you also talk about is being lean and capital efficient, right? But the other side of that is, how do I go and invest money into my company, such as brand awareness activities or brand research, or these different things that I want to test and experiment, so then I can gather the proper data to be able to execute on said action, right? So when companies start, and this is what I'm seeing a lot of the time, it's like they're ready to do everything, right? They, hire the store designers, they hire the best people out there, they spend. The first year or two might work well because they might be the first dispensary open in the state or in the province or in the city. They have a lineup of people outside their door, but they're being rewarded for any behavior, right? So a lot of times in business, you want to be rewarded for the good behavior and you want to be disincentivized for the bad behavior. It's a problem when you're rewarded for the bad behavior, but because there's so many customers coming in through the door, you don't know that it's a bad behavior in the first place, right? It's like, oh, I spent $100,000 on this useless campaign, but people are still coming in through the door, so that campaign must have worked, right? The problem is you don't know if it worked or didn't work, right? So when you're consulting for the different companies, LPs, dispensaries out there, how do you, again, balance the difference between being a lean, capital efficient company, but also balancing investing in the company itself so that you can, maximize your potential for growth?
I'll introduce a few axioms.
Please.
A few truisms that how I look at this. And yeah, I end up doing a lot of this work because a lot of the larger LPs or MSOs will call me in to sort of untangle this bowl of spaghetti in this investment. And your analogy is great because they don't always know what worked, what doesn't work. and there are people's jobs and there are vendor relationships tied up in those decisions. And instead of measuring twice and cutting once, they cut and then they're coming back and starting to measure. And it's not always so simple because there's a way more noise out there in the market than there is signal. So the dictums I start off with are number one, for the dispensary owner or the cultivator, know your cost structure. Seems simple, right? But many of these companies don't. So they look at this and say, okay, how do we balance investment versus keeping the lights on and so on versus, profit-seeking behavior? But if you don't know your costs and your margins, you can't begin to balance that because you have no clue. So, first thing you need to do is know thyself, as the expression goes. Understand my costs, understand, my margins and so on, and how those will change over time as you grow. And that's all about scalability. So I reframe the conversation with them about, it's not really about growth, which is watching your revenue go up, but it's about scalability, which is watching your revenue go up at a higher rate than your costs. And that's what you want. You want scalable, profitable growth, not just more growth. And that's the second dictum. It's really, what are the goals? Are we aiming growth for the sake of growth? Is important. And don't get me wrong, market share, all of these things are great. But if you're exchanging 2 nickels for a dime, it's not great, because at the end of the day, with that growth and with higher cost comes more complexity, higher cash flow needs, and so on and so forth. So you be careful about growth, because you can grow yourself into bankruptcy very quickly. So you want to focus on margin maintenance or margin expansion. So that's the second one. And the third thing is understanding where you compete and how you compete. So coming back to where we were like 20, 30 minutes ago, particularly if you're a retailer, you can't be all things to all people. So if you have a very focused strategy on a particular consumer segment who you know exactly what they want and you have the products that deliver on them, you can generally drive higher margins and reduce your cash flow and your risk in non-profit producing activities. So if you want to serve the high end of the market, and again, I'll go back to cars, for example. Lamborghini doesn't have to advertise during the Super Bowl. It's a lot of word of mouth. It's a lot of associating their product with wealthy, high performance people in certain places and so on and so forth. So they will know they don't have to spend a lot on so many of those other marketing vehicles. Whereas somebody like Walmart, for example, they need to be everywhere because, everyday low pricing is something you want to always drive into your consumers' minds. So if you have a very focused strategy and you understand your consumer, you could stop wasting money on marketing activities or on things like packaging or things like hiring too much staff or too little staff that don't serve your value proposition and don't communicate it that well. So what I find, companies that have very unfocused strategies tend to waste a lot of money in a lot of areas that don't generate profit for them. So I guess the third reason I gave you, which is all about aiming better and having a focused strategy and a focused value proposition, should be the first thing that every one of these companies do. And then everything builds back from that.
Right. So does that framework lead into what you would call being investor ready or M&A ready, where you have a business that is ready and focused on one main goal that is their North Star, that kind of guides their general actions, where they can kind of pivot, experiment, make some proper iterations as they go on? So is essentially what I'm asking is that one of the main frameworks of what makes a business investor ready, or is that a completely different conversation for those ready to kind of exit whatever cannabis company that they want to exit?
It's an excellent question. It's a very controversial topic because you'll have some experts, quote unquote, who will say, you build a business to sell it or to exit it because you're hoping investors or another company will want to buy you when they see XYZ, whether those are financial numbers or operating numbers or what have you. I'm very sympathetic to that argument because that at least gives you a goal and a potential exit. The problem with that strategy, and this is particularly true of cannabis, is that too many companies built that model. And guess what? There are no investors, very few equity investors in the market. There is very little M&A activity. The industry is looked at in some circles as dysfunctional and dead. So you're building your business to a goal that won't happen in the near future. What I tell cannabis operators and cannabis founders very early on is build a great business. Delight your consumers, through building brands, have high margins, have low operating costs, have a point of difference in the marketplace. And as long as you build a great business with profit, there will always be a buyer to come and want to buy you, or an investor to come and want to invest in you. That is the best way to ensure that you're going to have long-term sustainability. If you think about, starting a company and wanting to sell it, you won't always make the right decisions for your customers, for your stakeholders, your employees, and so on and so forth. And that's what we're seeing in both in Canada and the United States right now. A lot of companies were built for growth. They were built by investment bankers that wanted to roll up a lot of licenses and a lot of assets in different places, particularly in the United States. And guess what? Those assets and those companies are underperforming. They have too much debt. No one wants to buy them. So they created a build-to-fail business instead of a build-to-last business. And we can see what's happening right now with them.
So at the end of the day, a good business is a good business, cannabis or not.
Yeah, and a good business will pay potential dividends to shareholders, will pay competitive salaries to employees. You'll be able to pay your suppliers on time. There's a lot of virtue in being a good corporate citizen as well. And at the end of the day, what we're seeing in cannabis is, and I didn't answer this question before, but I will tell you, the slow emergence of some brands, like in Ontario, you've got Carmel, you've got Canera, and so on. People are coming back to these businesses, and they are starting to build a strong consumer franchise, which maybe in a year or 2 years will command premiums in the marketplace and will attract a lot of investors. There was no shortcuts for those companies doing it. They had to do it 1 foot at a time, hitting singles and doubles and walks. They never hit any grand slams out of the gate. And guess what? Their tried and true strategy has been the way to do it.
Mitchell, where can people find you? Please plug all of your information.
Best thing is on LinkedIn. I'm very active. I post a lot of free content like this, which is all about how to compete better, faster. I publish a blog, which I welcome everybody to sign up to. It's mitchellosak.substack.com. That's called the Cannabis Management Review. It's free. Got thousands of subscribers there. Or you can follow me on Twitter, X rather, at Mitchell Osak. I'm very active on social. If you have a question or you just wanted to shoot the SH, I'm happy to do that. I don't start the meter running when I have these kinds of conversations. I'm just looking to, upskill everybody and professionalize our great industry.
Mitchell, one of the things that I talk about with my clients when I build out their website is I talk about, what is the value per square pixel, right? Like, is the thing on the website providing value to the customers that are looking at the thing that you're providing, right? And that doesn't necessarily mean driving them to a deals page. It could be as simple as making sure you have your phone number easily available for people to find, right? In this podcast, I would like to say the value per second or the value per minute of every time you spoke was incredibly high as well. So I want to say thank you for taking the time out of your busy day to kind of share the information that you have for everyone, to have available on socials and for free as well. And I really appreciate you having you on the call.
Thank you, Brandon. It's been terrific.
No worries. All right. And for everybody else who's still listening, thanks for hopping on the Dispensary Marketing Podcast. I'm your host, Brandon Quant, and I'll talk to you later. Hey, according to YouTube, this is the best next video for you. Go ahead and click it now.
Keep going pretty boy.